Welcome to the Crypto Prism channel. Let's take a look at the latest price action of Bitcoin. Recently, Bitcoin dropped to a low of $74,536. This was the final liquidation point for the bulls. I will repeat this later in the program. What I can tell you now is that the major players have already exited the market. The confirmation point was on October 11th. There was a single wick that pierced more than 10,000 points. Every rebound after that was actually preparing for a bigger drop. Today, I will discuss Bitcoin's latest price action from both a fundamental and a technical perspective. If you're interested, make sure to watch the entire video until the end. Let's first take a look at the monthly chart. At the beginning of last month, I said the only chance for a rebound was at the start of the month. The purpose was to form an upper wick. As expected, Bitcoin rallied to nearly $98,000. After forming that upper wick, it immediately sold off. On the monthly level, it is now broken below October's low dot, so at this point, this is the bull's liquidation zone. Why? You need to look at the dates. The lowest point of 2025 was around 74,457. If this level gets broken, then all the bulls who are holding leverage contracts in 2025 are under maximum pressure. Breaking this level marks their liquidation point. That is the key level. From the monthly perspective, this is a bearish signal. Dot is decline, consolidation, and then another drop. And with a false breakout at the top, there is a high probability that the bottom will also be taken out. Now, let's move to the weekly chart of Bitcoin. Why do I believe that even if there is a rebound, it is still heading toward the 74,000 region? If we apply the box range theory and measure a one-to-one breakdown from the range, the target comes to around $72,000. That would also mean breaking below the 74,400 bull liquidation level. This is a projection based on range theory. Let's also review this move. After the false breakout and drop, didn't I already tell everyone at that point that once this trend line was broken, it would mark the beginning of acceleration? On the weekly level, there was a false breakout engulfing pattern followed by continued selling. In this kind of downtrend, all bullish trades are merely scalp opportunities within a broader decline. What is the purpose of rebounds? To facilitate a better drop, remember that. I also want to explain why, during that major crash when price reached this level, I was so certain that it would decline in a channel-like oscillating structure. Let's mark out these key levels together. If the same group of market makers has controlled the market from beginning to end, their methods are similar, though not identical. So the final direction now is still downward. How far can it drop using Fibonacci? I'll measure it from the daily chart. On the daily level, it forms something similar to a 0.618 rejection, also within a channel. This aligns well with reverse projection logic. Reverse projection means using Fibonacci extension behavior to infer potential bottom levels. That would be around minus 0.272 and dash 0.618. These are projection zones. I'm not telling you where the exact bottom is, but I can tell you that this current level already feels unbearable to many people. If it drops to 53,000, can you handle that? You need to prepare for the worst case scenario. These numbers are only references. They are not entry signals, because no one can tell you the exact level where market makers will decide to dump. They also react to market conditions. If price drops to a certain level, and suddenly hundreds of billions of dollars enter if whales step in. If companies like Tesla or Oracle announce Bitcoin purchases, it can push the price up. So all we can do is be mentally prepared. In the short term, focus on the wick low from the previous crash at $80,600. Let me share an experience. In a downtrend, you can attempt to trade the first potential double bottom. If you try to bet on a second double bottom, you will almost always get stopped out. Right now, we are at a bull liquidation point. Even if price rebounds without making a new low, it will likely come back down again later. The daily chart must reclaim and hold above $80,600 before I consider going long. Don't go long just because all bloggers are bearish. The power of market consensus in a trend is extremely strong. Trading against the trend is dangerous. There is a large CME gap at $84,000. It may fill the gap first and then drop, or drop first and rebound to fill it. But in the short term, it is unlikely to be fully filled. Even if it is filled, the bias remains bearish. Currently, the $81,000 to $86,000 range is a key resistance zone controlled by major players. Unless price can firmly reclaim and hold above this range, the overall strategy remains bearish. That's all for today. See you in the next video.